But time for the big market conversation. On Talking Point this morning, we have Sandeep Tandon, founder and CIO of Quant Mutual Fund. Sandeep, a very good morning to you. I think we can still do the Happy New Year wishes, at least for the first week. The extension can continue. So wish you a very happy 2026 and thank you for joining us this morning on India Market Open. What is the outlook looking like, taking into account the last 48 hours? Because we ended 2025 with the thought that things are settling down between Ukraine and Russia, Taiwan and Cambodia had sort of eased up, and then you have this whole Venezuela situation flare up.
See, one has to understand that we are living in a elevated geopolitical environment. Okay, the geopolitics will remain elevated, not only from a very near-term perspective. I'm saying it has potential to last many more years. So that's if I look at those cycles, then obviously next 5-7 years also this geopolitical volatility will remain high. Okay, so we have to accept this as a new normal and live with that. Now let's understand this. A lot of people got slightly paranoid on the weekend, whether they'll react anything on the crude prices, but frankly speaking, there's hardly any impact. Okay, it should not be also. See, this battle is about dollar supremacy because it's not about just crude alone. Dollar is losing his relevance, and when people are moving towards other currency, and we are talking about multipolar world, with that background, obviously, US does not want to leave his superiority or the status which they have enjoyed as a reserve currency status for a longer period of time. So this is about that supremacy battle about dollar. So if they're able to control Venezuela, they're able to sell oil in the dollar terms, not in any other currency. So that's the way we deal with this situation. And I think it's a constructive and good news for consumer country like India or China. Okay, maybe slightly negative for China because they were buying in yuan. But for us, we were anyway buying in dollar terms with Venezuela. So it does not make any big difference, rather slightly advantageous only.
In the context of the comments this morning on the tariff and the trade deal, and then the hardening of position, how do you see that from an India-US perspective? And the whole tariff question, Sandeep?
See, I think the way it is being delayed, it does not look like it's happening on immediate basis. I think it's a battle of their individual terms. India has its own perspective, US has its own perspective. So I think I think really stuck. That's the way I look at it. But look at the good part. Government is moving aggressively on the bilateral side, whether you're talking about with the European region, Middle East, New Zealand, many countries we are talking about bilateral treaty getting signed. So that is also a very constructive background that government and entrepreneur both are working together to ensure that the dependency on US market, obviously one of the largest markets, should come down significantly, and then they have many more markets. So it could be a short-term pain or medium-term pain, but could be good from a country from a longer term perspective. So I think even market has also given up that hope that is going to the trade deal is around the corner. I think nobody talks about trade deal anymore. We have all have accepted the new reality. This is the way we have to move forward. And I think it is accepted by the market also.
Sandeep, so how does, good morning, of course, and wishing you a fabulous 2026. And thank you for joining in today. How do you anticipate 2026 to be? We spoke about how the year was very quiet, but we still had, in rupee terms at least, near 10.5% return for the Nifty, broader market salt. Can there be a broad-based up move as GDP growth and earnings growth come back, even if there's no trade deal, as you said?
So I think economy is anyway coming back, okay, and see, market is always ahead of the curve. If you recollect, we as a house, based on high frequency indicator, downgraded India in July 2024. Okay, now obviously macro data is being constructive. We have been constructive for nearly a quarter. We have been highlighting that things have changed for India, is looking slightly better, and obviously market is not willing to accept the new role because people get used to certain narrative which has been built over a period of time. The way I will look at is that instead of getting worried about that we have seen a difficult phase of 2025, I'm looking at the background with that people are concerned, cautious. Okay, stocks are neglected zone. India has underperformed. Rupee has depreciated. So all worst possible news has been largely factor. Going forward, things can only improve from the current level. See, our worry is not about India. Frankly speaking, we are more constructive on India. And something similarly in beginning 2025, I talked about that year end will be positive. So even I will say you will 2026, we have already made all-time high, and I think we will make even broader markets will also make all-time high. Also, I'm not ruling out, but the challenge is not India. The challenge is US market, developed market, where we see signs of complacency. The market, global market are extraordinary. Complacency is getting built. Okay, it's something similar what has happening in July 2024. We are getting similar signs for US market. So my worry is global market, not Indian market. And there could be two theses because India has underperformed significantly. If the global market corrects, a lot of eminent strategists believe that money will shift to India. If that happens, that will be great. But I always believe from the sentiment perspective, when mother of all exchanges, the US corrects, it's bound to that you will also correct a bit. So far the correlation has been negative and India has been doing better than the US in terms of the recent fall also, which we saw last quarter. So from that background is constructive, but I will not form a very aggressive opinion on either side. This is a market where you have to look for a short-term and medium-term opportunities rather than playing this old music of long-term.
Okay, interesting. So more agile, more nimble. Even large AMCs might have to do that. Sandeep, you're known for doing that. I'm trying to understand how do you therefore think about the short and the medium term? Because there seem to be a number of factors at play. CV cycle seems to be turning. Metals seem to be coming in a good spot. Consumption, including FMCG, if the recent updates are to be believed, is doing well. How do you see the short term?
So from a very short-term perspective, as I said, background is very constructive. You know, we are beginning of the new year where we think up to large extent this negative thing has been priced in. We are seeing selling exhaustion the FIS side. We have seen extreme USD INR pair also depreciated sharply, which was a very steep depreciation. That also gives me a comfort that this is a peaking of the cycle, not the breakout cycle. That's a lot of people believe that. So if I look at the combination approach, obviously, both short-term and near-term looks more constructive for India, and obviously you have to be very stock-specific, sector-specific, because I expect that even 2026 will be more volatile, and even from the precious metal point of view, which has been a very stable one-way up move, which we have seen in 2026, you will see volatility in the precious metal space also in a big way.
Sandeep, in terms of trends, and if you had to forecast what will be those major trends coming in, kicking off with what we'll see from Q3, and we have some of the highlights from the business updates as well. Do you think banking, NBFCs, banks, NBFCs continue to be in prime focus as far as you're concerned?
See, obviously, when banking and financial sector are part of a leverage economy. So if overall economy is started improving, then these sector logically should do very well. And some of these names are not that expensive, but the way they were in the past. But we also have to keep in mind they have also rallied in last one quarter. So it's not like they are just beginning the new trend. We are already in the up move for a while. So we have to see how long it will last. But fundamentally, we remain constructive on this space. What is very important, Tamanna, to have to see that how this year will play out. So we have to identify the sector stocks which has underperformed, let's say last 1 year, last 2 years, okay, or last 3 years, you know. So I will go for 1, 2, and 3 year perspective and see their relative underperformance. How, if numbers are improving, they're in neglected zone, hated zone, okay. People have dropped coverage. People have given up on these companies. People have virtually capitulated. You know, those are the names. If you can identify, our idea is just to identify stock where my downside is first protected, and then I look for upside. Okay, so the key message is the downside has to protect. So you have to identify these names, and I think there are enough opportunities.
Any of these names, I know you won't give specific names, but any of these names that you see in terms of opportunities in the broader markets as well, Sandeep?
No, I think every sector you will get one or two of such stocks, you know. So if you have to sit down and analyze sector specific, which are the stock have relatively underperformed their own benchmark for, or the sectoral benchmark for a while, those are the names which you have to look for the first filter. Second thing, if you look at some of the larger themes like, energy as a basket looks very good, insurance as a basket looks very good, large infra names looks good. Okay. So is the case with some of the PSU banks also, or some of the large cap banks. So these are the names which we can look at. But obviously, insurance is one area which we think under ownership exists in a big way. They have underperformed the market. So you have to identify these baskets and keep on building. The downside is limited, and they are fairly liquid names, and most of them are large cap names. This also gives you psychological comfort.
Got it. Okay, Sandeep, the other question is whether the consumption-led growth that we are likely to see would be at the cost of capex themes, both from a market acceptance perspective as well as overall business, or do you reckon both of them can move ahead in tandem?
See, capex has already slowed down. If you look at even on the PSU perspective, the government spending also has come off significantly. So that trend is quite visible, and I think it can only, I don't think if I have to say that will gather momentum, but I think extraordinary money, whatever government has to spend, they have already done that. So it will be now normal capex, extraordinary capex, which we have seen over a period of time last many years. I think that phase is peaked out. So obviously the consumption stocks, the consumption cycle looks slightly better, and that has been the government focus also with the GST rationalization. It's a clear endorsement of government thinking in that direction, that they want to boost the consumption and they are willing to cut down the tax structures significantly. And I'm using the word significantly, GST cut we have seen. So I think with a lag effect of maybe a quarter or so, I think should look up at maybe January onward will start looking even better, because all those inventory challenges which we saw in the third quarter has also settled down. So you will see volume specific growth also coming back to these sectors.
I wonder if there's anything that's exciting you, Sandeep, from the primary markets perspective this year going ahead, because some of the big ones, of course, it'll catch steam. Some of the big ones are yet to come in. Do you think this is also going to be a year where you have interesting issues and more potential for investors, or another year where maybe investors will be left disappointed?
So it's very difficult call, frankly speaking. The extraordinary hype or euphoric move which we have seen in this IPO market has still not corrected significantly. I think it's just a process. So sometimes it's a cycle, you have to live with that, because as of now, M2M gains are still very meaningful on the listing perspective on average basis. So people will tend to participate when over a period of time, when they realize the M2M gains are turning negative, because if you really look at from a longer term perspective or last 1 year performance, how many stocks are quoting below the IPO price? The list is pretty large. So I think message is very clear that one has to be very selective, very, very choosy about in terms of participating. Valuation has to be attractive, and which is not the case in most of the IPOs currently. So promoters are equally greedy, and I think why to blame promoter? Investors are willing to give that premium. Hence, they will command that premium, which is not required. Maybe not, they don't deserve it, but as long as the demand supply game, when demand is much higher than the supply, then you don't have too many options. So I think I'm very clearly, we as a house of the fund mutual fund are very selective, very choosy. We rarely participate in these names.
What about, we've come to that season, Sandeep, where I must ask you the perfunctory question, but I think an important one. What are you expecting from this year's budget?
Frankly speaking, I think not much is expected, except people only looking about the changes that can happen on the long-term capital gain. If anything, that is the only thing which the market is slightly watching closely. I think budget is largely become a non-event, because throughout the year, government has taken not many initiatives. So I don't expect that budget will be a game changer that the way it used to happen in the past. Is one of the event, and last 2 years I'm saying that it comes closer to that. You have some noise happening on the certain stocks, assuming certain announcement will come. I think there are enough announcement which is there. I don't see that I will like to conclude too much, except this the taxation aspect which I talked about. I don't think in market is expecting much from the budget also, because government is putting efforts in every direction. So I don't think one should be only dependent on the budget. So it's still one event which will sail through and life will be normal in the first week of February.
Only thing different which we are hearing is budget will probably be on a Sunday this time. So that will definitely be a different experience for everyone. But we'll wait for the official announcement of the dates. Thank you so much, Sandeep, for joining in. Always a pleasure to speak with you.
Yeah, thanks a lot. Thanks for inviting.
Yeah, yeah.